Hey guys, this is Karthik Kantwal from Apex Finserv and I'm back with your daily dose of charts with the equity watch list and the index outlook for tomorrow's trading session. We don't have a lot to discuss because of course it was weekend, so nothing of the prior watch list to be discussed. So without further ado, let's move on to what's new for tomorrow. I do hope you have checked out the weekend video. If you have not, the link is in the description below. It will also be attached at the end of this video. So check it out. It's about the concept of trailing stop loss. It might be helpful for those of you who are pursuing trend friendly systems. Now coming to the equity trades for tomorrow, starting with the first one, that is HUL, Hindustan Unilever, wherein we are going to go for a short position because if you look at this chart that I have on the screen, which is 1 hour time frame, you had a strong uptrend in the higher high, higher low formation, but now it has made lower highs and it is almost about to break the previous swing low. So at this point, one can go for short entries near the previous supply zone or the previous swing point, which happens to be near 2175. So that is exactly where we have a planned short trade. Stop loss at 2200. Ideal targets 1% on the downside. Moving on to the next, Maruti, we have a long trade planned because you can see it had a downwards lower low lower high formation trend line. Everything has been broken really strongly, and it has turned properly bullish at this point of time. You can also say that this is completion or maybe just continuation of, if you say this macro structure of higher highs, higher low, and then again up to the higher high. So if it breaks 7100, we can see 7500 back on Maruti, but that's for positional. For tomorrow, what we have is a long at a pullback at 7000 exact, big psychological number, also important support level. Was a resistance, but got broken and then had many a times of roll reversal. This time again, resistance turned support, should act pretty decently. We have a long planned at 7000, stop loss at 6920. Ideal targets 1% on the upside. Moving on to the next, Asian Paints, similar to Maruti. Not similar in the sense it was bullish PLSA, entered range bound but did not reverse, and now it has broken the trading range. So we're going to go for a long at the previous supply turned demand now at 2090, stop loss at 2065, and ideal targets 1% on the upside. Moving on to the next, Piramal Enterprises. Piramal Enterprises seems to be in the phase that Asian Paints has just crossed. So we're going to go for a short entry at the nearest swing point and supply zone at 1350. Stop loss at 1365 and ideal targets 1% on the downside. This is a bit aggressive, but other trades are conservative, so it balances out. Moving on to the final one that we have is SBI, and again slightly aggressive. We have a long planned at 200. If you remember, we had a long here before as well. This green candle that you see, that was the long we had. So we are going to go for a long position at 200, stop loss at 198, and ideal targets 1% on the upside. Now the reason for this is, again, we had a good higher high, higher low formation, but it tried to reverse, but then again failed in continuation of higher highs and higher lows. So even if there's a deep pullback, it should be able to hold the level of 200 pretty strongly. Moving on to the indices, starting with the first one, Nifty. Now on Nifty, we have an immediate zone on the chart at the current market price, which is 11,930, 11,950. If that is held on, we can see a retest of 12,000. If that is broken on the downside, we can expect a swift 70 to 80 points fall down till the next zone at 11,850, 11,840. So the current market price is a really critical spot for Nifty. Either way, we have a 70 to 80 points move, which you can maximize on if you are an aggressive trader. If you are a conservative trader, go for breakouts about 12,000 or under 11,850. That should serve you really nicely. Now talking about the option chain, we have resistance immediate at 12,000. Like since I believe it's the last couple of weeks, same resistance, 12,000 with 700 and 9,000 average contracts. Significant at 12,200 with 700,000 average contracts. On the support side, yeah, immediate support at 11,900 with 700 and 2,000 average contracts. Significant support at 11,800 with 746,000 average contracts. So both the sides, the contracts have been added more or less in a similar manner. So it's not really that strong on the bulls or the bear side. It's pretty neutral. Talking about the PCR of volume, that comes out to be at 0.89. That is bearish. So the option buyers do think that Nifty is going to come diving down. Now let's see. I don't really think, it can of course, but not aggressively. I'm not prepared for shorts or longs. I'll be waiting until this zone is cleared out on the upside or downside, and depending on the price action near this zone 11,950 to 11,930, उसके बीच में depending on how it reacts, I'll go for longs for 12,000 or shorts for 11,850, 11,860. Moving on to the next index, Bank Nifty. Bank Nifty is on a similar stage. It is also forming a, if you are well versed with the chart patterns, it's also going to give you somewhat of a symmetrical triangle formation right now. So what you have there is a directionless pattern or a neutral pattern. So you are going to have to wait for a breakout to happen to give you a high quality entry signal. I typically do not trade biasless patterns or neutral patterns because both the sides can be an actual breakout. Neither side is actual invalidation. So let's see how it goes. Again, just like Nifty, I would wait or prefer to wait until this zone is cleared out, which is from 24,470 to 24,540. So this 70 point zone, jither bhi clear out hota hai upside downside, I'll take a trade in that direction. Talking about the option chain gives you immediate resistance at 24,500 with 230,000 added contracts. Significant resistance at 25,000 with 283,000 added contracts. On the support side, you have immediate support at 24,500 with 299,000 added contracts. Significant support at 24,000 with 385,000 added contracts. The PCR, however, is a tad bit more bearish than Nifty. It comes out at 0.95 whereas Nifty was at 0.89. So it's a bit more bearish, but keep in mind this is PCR of volume and not the PCR of open interest. So this reflects the option buyers mentality, and they are speculative participants, so they might as well be wrong. But just it gives you an idea of the general market sentiment for that particular index. Now these are all the charts that I have to discuss with you guys for today. I hope you guys are really enjoying the discussions. If you are not, let us know why in the comment section below, and if you are, let us know that in the comment section below as well. Thank you so much for watching, guys. I hope you have a wonderful green start to the week tomorrow. As usual, you can get all this content and probably a bit more at our Telegram channel at @ApexFinServe. So check us out there as well. Don't forget to like, share, subscribe to the channel, comment something nice, of course, press that bell notification icon too. Thank you once again for watching, guys. Have a good night. Bye.